Hi, welcome to A Conversation with Karen. Today we're talking with Nick the mortgage guy.
Good morning. Thank you for having me.
I'm so glad that you're here.
Thank you. It's been a while since I've seen you.
I know, but we've spoken almost every day. Tell us a little bit about how you got involved in doing what you do.
My older brother did mortgages back in the day, so I always knew, the whole business of dialing the phone and, getting leads. And so I was always kind of interested in that, right? But really how I got going full time was a guy by the name of Stephen Toohey. Real nice guy, but I was talking to him one day at a gas station and, just talking about what he does and, what I was doing at that time. And he told me to go in, start working, in the mortgage field. And I started and it took off from there. I started, dialing the leads again, doing refinances, and then, from there, just all referrals now,
But was that your one and only job?
No, I worked with ServPro for a little bit, which was, restoration, floods, fire damage, all that stuff.
So you were doing the back end of it?
Right, yeah.
Oh, okay. So it's always been real estate related?
Always real estate related. And then at one point I was thinking about becoming a cop, which, was just a thought as a young guy, secure job, salary, pension, but that didn't work out. And then I just really focused on the real estate and the mortgages, and from the mortgages I ventured off into partnering on some flips and doing the hard money, so lending money to investors, and
which we did together.
Yeah, we did. Your first flip, that was a good one.
First flip, yeah.
And you did a good job too. That was fast, in and out.
That was fast. Yeah, we sold it the day that we closed on it. We went into contract 2 days later with the buyer. I mean, it was amazing, and you were so quick.
Yeah, thank you.
We actually had to wait for the
title.
The title on it.
Yeah, we had to wait for the title to come in.
That was
a good house. Those are the best houses to flip right now. The first time home buyer, cheap, 3 to 450 range. Those fly off the market.
Well, everything.
And you didn't put it on the market. Maybe you shouldn't put it on the market. You would have got 100.
It was a great young man who was desperate for a home, and it ended up. He's so happy. That makes you feel good.
But sometimes that can lead to other business, so.
Yeah, but it also just makes you feel good when someone is working so hard to find, and it's really difficult out there. So let's talk about the market.
Yeah.
It's gonna be difficult. I know it's difficult for us working with buyers, but here you are pre-approving people and pre-approving, and then
I think the tough thing is right now is pre-approving in any other market who would be a good buyer, but maybe they don't have that 20% down, 25% down, which is fine on the mortgage side, but when you're putting an offer of $50,000, $60,000 over asking, and now you have the pressure of signing that contract stating if it doesn't appraise, you still have to come up with that extra money. I think that's the issue right now with some buyers who don't have that additional money. So, and that's where I'm coming across a lot, because, and then the pressure's on me, as a mortgage person, you as an agent of, is the house going to appraise? And I can't really answer that. The appraisers have to go out. If there's comps that sold in the area, the appraiser's going to use those comps and the house is going to appraise. If there's not, then, unfortunately, I can't promise that a house will appraise.
So you like when the agents pre-negotiate any shortages so that there's no surprises?
It makes, of course, it's such a tough question to be asked, of, if it appraises short, do I have to come up with the money, or can you guarantee it's going to appraise? And I can't. I mean, you could ask appraisers beforehand. Hey, take a look at this. Appraisers that we know, and do you think this is going to appraise? Do you have comps? You can do that, but again, appraisers truly don't know until they go out to the house, because there's a lot of adjustments that get done. If there's a patio, if there, So
how old is the kitchen? 5 years old,
right.
10 years old, 13 years old. How old's the roof?
Right.
And the appraisers are trying, but at the same time,
they can only push it so much. That it's
right. I mean, they have to do the right thing, and buyers are. I mean, I've had in the last month, one buyer is guaranteeing $40,000 if the appraisal comes in short. Another buyer is guaranteeing $55,000 if the appraisal comes in short. And then I had someone who guaranteed 15, but we knew that it was gonna appraise, and actually the appraisal just came
I had
in.
one close last week, and the guy made up a $60,000 gap.
60.
But it was well known before the appraisal. I had the contract signed that the house was not going to appraise. It was just impossible. It wasn't, So
People are desperate, so they're doing it. I mean,
but the thing is, they're desperate, but they're also, this particular family, 3 kids living in a small apartment for $3,000 a month. So now his mortgage is $2,800 a month, which yes, he overpaid a little bit for the house, but he's saving money and he's going to build equity,
did
eventually.
he end up coming $60,000 out of his pocket? Did the appraisal come in somewhat above asking?
He came in $60,000 short, and the appraisal still came in higher than everyone expected.
Wow.
So it was
But he had the money.
Oh, he had the money, yeah, and he was well prepared even before signing the contract. Of yes, I know it's not going to appraise. I want the house. No one else is getting this house. I am, and he got it.
What is I mean, I just sold a house to someone who only was putting down 3%,
Mm-hmm.
and we were shocked. I'm working with 3 buyers that are putting 20% down. They can't get a house.
Right.
And then I'm working with 1 buyer 2 buyers that are putting 3% down, and one got a house within 3 weeks.
Well, we got our client who we closed last week.
FHA.
FHA 3.5% down.
Unbelievable.
So you got that. Yeah, you got that offer accepted. We closed. I was a little shocked that you got the offer accepted. I mean, the area that it was in is a pretty hot area.
And under asking.
Under asking, yeah.
Wow.
That was good. That was good again. Good job.
There are homes that some people, they're not quite there where you can flip them. You have to find the unsellables.
Right.
The ones that are overpriced and need too much work. Not enough work for a flip, but enough work that other people are like, maybe the layout is off.
Right.
So the house that person bought, he's planning on switching where the kitchen is, which is a big job.
Yeah, you gotta move the plumbing, you gotta move, yeah.
And fortunately, the basement is right underneath it, so he
Right.
can do that, and it's not that far that he's doing it. But still, the layout was awkward, and people couldn't see past that. So
Right.
it worked for him. He's a homeowner, he's so excited.
He was very happy.
And it was challenging because on the seller side, they kept on changing what they were
Right.
willing to do. It wasn't the easiest deal, but we got it done.
Yeah, of course.
And-
All that matters is they closed and everyone
And
was
he's happy. Yeah,
Got the
everyone
keys.
walked away happy. It was amazing to see someone in this market with an FHA loan have a win.
And with lower credit too, because as you know, I mean, you have quite a few listings, and I know you vet whoever puts offers in on your houses. You have to be honest and say, when an agent calls and says, hey, how's their credit,
And I
tend to be
asked,
honest. Yeah, you have to be
well, I
honest.
ask all the
So-
questions. I'm like, okay, what are they willing to share, or they have to go through you
Right.
to get fully vetted. And I can't demand that they use you,
Of
but
course not.
usually after speaking with you, they want to switch to you.
Thank you. Yeah.
Because you're really able to advise them. And even sometimes where they're not right there yet, where they can buy,
Right.
you're willing to share with them what they need to do
Of course.
in order to get ready. So maybe it's not this year, but maybe it's next year.
Right. I think we've done that a few times as well. I've gotten some people ready, and one in particular was the guy, I forgot his name,
Anthony.
Holbrook.
Anthony.
Holbrook, yeah. We worked with him. He got where he had to be. Within a few months, we got him in the house closed.
Yes, and he was on a timeline,
Timeline.
and we told him, you told him, and I just kept pushing him, and we.
As long as the clients listen and they do what we say, hey,
Yes.
pay this card down to this, do this, put this amount of money, save this amount of money in the bank, it'll always work out.
So that's the most important thing is, even if you're not ready to buy a house, but you want to start preparing, you can call Nick and he will go over what you should do and in what order. Because
Right.
maybe you have 6 credit cards and you're paying them all equally, and you really need to start paying this one and then go down to this one.
Right.
And what other debt you might have, a car
The
loan.
balances are huge right now, especially with everybody, sitting at home for the past year, shopping online and using their cards for home improvements. You got to keep those credit card balances low. That's what I've been seeing a lot of, people, they're making the payments. It's just, that $20,000 credit card, the balance is $15,000, and that hurts, which it doesn't really make sense. And a lot of people always tell me, but I paid on time. So it's like, these credit companies want to give you more credit, but they don't want you to use it. Otherwise, it hurts your score.
So if you're able to, it's really a good thing to pay off your credit cards each month in full.
Right.
But there's also, have you ever dealt with like someone who had like a really high, whether it be a student loan or a car loan?
Of course.
And then you have them switch to another where they consolidate things?
Yeah, I've had them do that. The only thing is now I actually have a buyer who, he's a doctor, so he has about $600,000 in student loans, and he's at the jumbo limit. He's buying a house for over $1 million, and he's not paying the student loans right now. They're on forbearance, with the pandemic. And a lot of people don't know this, but just because you're on forbearance and you're not making those student loans, you still have to count the payment towards your debt to income. So $460,000 or $500,000, I forgot the balance, times that 1.15%, it was a big chunk. So, he had to, get the cosigner before I gave him the pre-approval. So he found, a family member to cosign with him, and we're making it work. He's actually, I think, signing a contract next week. But, yeah, the student loans are definitely huge right now, especially because everyone, you didn't have to pay them for the past year.
Right.
So, but you still have to count that towards your debt to income.
Now, here's another thing that a lot of people don't know about when they're buying a house with solar panels.
Oh, yeah.
So if they're owned outright, it's not a lien, but if they're leased,
You have to count that lease.
and it's the total amount of the lease as an additional
Debt.
debt on that, so it's a
Correct.
lien against the house.
Right. And, a lot of times, people, I just had one, maybe a few months ago where I didn't know there were solar panels on the house because they were on the back. So when I look up the listing, you don't see it on
Right.
the back. And, I guess nobody really disclosed it or spoke about the solar panels. And, that was an extra debt that the buyer had to take on, which was fine, but.
And it's weird because you don't, when you get pre-approval for a house, they don't go, okay, so your electric is gonna be $200 a month, but because it's a lien on the house, they have to count the solar panels. So it's really not an additional fee, but you just have to know that if you're pre-approved for $400 and you're buying the house for $400 and there's $20,000 on that solar, you've got to really be pre-approved for $420.
Of course. I tell people, I tell my buyers all the time, whatever house that you go and look at or that you have interest in, just send me the address so I can run the numbers so you know the exact payment and, really what you're looking at before you go and look at it and put an offer, and you'll have an idea what the payment's going to be, cash to close, because I want to verify the taxes.
Right.
And don't go up the taxes on Zillow.
Oh, forget it. The
Yeah.
taxes are so wrong. Every time I tell all my buyers, the minute you see a house, send me the address, because if you're approved for $10,000 in taxes, it could be $13,000.
Right, you
And
have
that
to
changes.
verify those taxes.
Yeah, because every $1,200 in taxes is $100 a
course.
month,
Mhm.
but every $10,000 in the listing price is only.
Probably around like $50, 50,
Yeah.
60, around there. But what I've been noticing a lot too is some of these listings are showing the taxes would start. And
you're
you
not
have to
allowed to do
qualify.
that.
You have to qualify with the full, the full true taxes.
Right, yeah,
So-
I always verify the taxes.
Yeah, I know you do. Yeah, it's because when we have a buyer together, you usually call me, hey, I'm showing them this house. The true taxes are this, and it makes it, it's easy to look up the tax, but it makes it a little bit easier because I could just, all right, let me plug in these numbers.
Yeah, you can't go by what the listing agent does. You always have to verify everything
Right.
from your client.
Yeah, I agree. Everything.
Everything, I know. And it's okay to ask those questions.
Of course.
And especially as a listing agent when we're selling something, and which is why I put right in my listings, because not all mortgage guys are created equal.
Right. That's true.
Some people just slap it against the wall to see if it'll stick.
Of course.
You fully vet everybody. It's not like when they get a pre-approval, it's a pre-approval.
Right, of
It's
course.
not a verbal, they told me this is what they make, I've seen all their documents. It's really important because as a buyer, you want to make sure that when you go in, you know that you can afford it. And more than what you can afford, what you want to spend. So
Right.
it might be less than you can afford. You know, you don't want
Right.
to live for your house, you want to live in your house.
Yeah.
And that's what I like, is you'll go over and say, well, if you want your payment to be this is the number you're looking at with these taxes.
Right.
A lot of people just go, oh, I can afford this, and then you say to them, well, what taxes?
On the other side, though, we also have to be, realistic, right? Some people, I want to keep my payment around $2,000, and a payment around $2,000 right now on Long Island for a house, no matter where it is, it's really tough.
Co-ops.
A co-op, but a house. No, yeah.
Right,
So-
I want a house with 4 bedrooms, 2.5 baths, a pool, a basement, 2-car garage, air conditioning,
And the best school district.
in the best school district. And I would like to pay $200,000.
And it better not be on a WO line.
And no work. I don't want to do any work.
I want to move it ready. And people have
Those
said
days
that
are
before,
gone.
you know that.
Those days
Yeah.
are gone, unfortunately. So you've been doing this for how many years?
Full-time as a loan officer since 13, so what is that? 13?
8 years.
8 years.
8 years.
So
And we
the
met. We met like 5 years ago.
5, 6 years ago.
Yes. You're creative within the limits.
Yep.
So
Thank you.
that's really good. And you're accessible, so
thank
that I can have somebody call you on a Sunday. I remember one time you were on a jet ski.
Oh, yeah.
And you're like, I'm just going on the jet ski. I'll call him back in a couple of hours. But it was the Sunday afternoon. So you deal with many, many agents.
Right.
Okay. And you see all the issues that are happening because of short appraisals and whatever. What advice do you have for buyers out there in order to get prepared to buy a house?
Save, save, save. Save, save, save. The more money you have, the better, opportunity and chance you have of getting your offer accepted. Even if it's from saving from 3.5% down to be able, to 5% or 10%, it's a much stronger offer. And it's, in this market, I think, it's not all about the down payment money, but sometimes I feel like it is, right? Because people just want to see.
But do you also think, and this is what I'm telling my buyers when I meet with them, is it's like the inquisition. When I go to present an offer, I want to present an offer that the listing agent and seller are like, oh, wow, that's a lot of information. So they can only have 3.5% down, like those other people that I just got an accepted
Right.
offer for. But you put together a comprehensive package where it says all the details. Like they could only have 3.5% down because the money is in their 401k or they're a young couple.
Right.
But they have 800 credit score. That's great. They have a great income, but they're only there 2 years. So how much have they been able to save?
Of course.
So when they share that do you get people that call you, agents that call you? And I know there's privacy laws that you can't do it, but do you tell your buyers, am I allowed to share this information?
Of course.
Because there's so many times where I'll get an offer, it's just a pre-approval in a binder, and I'm like, I call the mortgage person, I go, I can't talk to you.
Yeah, a lot of the times I'm prepared for it because the buyer or, the buyer and the agent will call me, hey, we're putting an offer in on, so-and-so address, the agent's gonna reach out. Okay, great, if they ask me how much money's in the bank, credit score, job, where you work, is it W-2, 1099, can I disclose that? Yes, of course, we want the house. So
you prepare them for that.
of course.
You have
And
to.
I don't remember the last time I've done, a purchase transaction where the listing agent hasn't called me and asked me for those details.
Now, if they don't want it, have you ever had a buyer that didn't want you to disclose?
Never.
So it's simply the mortgage person asking that question, can I disclose?
Of course, yeah. I don't think the chances of getting the offer approved would be very high if the buyer didn't want what their credit score is, how much money I don't think, what's the debt to income. I don't think the offer would be accepted if a buyer declined to, have me or have their agent disclose that information to the seller or the listing agent.
Yeah, it's a difficult market.
Mhm.
And so the buyers have to be prepared. They have to
Right.
be prepared. I tell them I'm gonna ask you for everything except for your firstborn.
Right.
That's it. So Nick is with Atlantic Home Capital Corp. for all your real estate needs, whether or not you're refinancing. Are they doing refis right now?
Of course.
Okay.
A lot, yeah.
I heard that they cut some out because there was so many people refinancing with the low rates.
No.
Okay.
Investment properties, some banks pulled back on, but we're still doing them.
Okay.
Mm-hmm.
We're getting first-time home buyers.
Mhm.
Great. If you're looking to flip a home and need hard money, Nick is the go-to guy. It's so easy. It took me, you walked me through,
Mm-hmm.
and we got that done. And if you're looking to sell something that you really can't put on the market because you're afraid that it won't pass through an appraisal, we'll buy it and flip it.
Definitely. We will. And you handle everything.
So, what else do you do?
That's
first,
it. Anything real estate
FHA.
finance.
Let's go through the list of what you do.
FHA, conventional, VA for veterans, hard money, which is for fix and flippers, asset based, stated income, and commercial loans. So pretty much everything real estate finance.
Do you do 203K loans?
Of course, that's FHA. Yeah.
So, okay, so if you're buying something but you need to put money in to make it livable.
Right. Not always just so much livable, but also to make it to your standard, how you want it, you know.
As long as the money that you spend is going to appraise at that value.
Right, you go off the purchase price plus the money you're gonna need to renovate the house. As long as it appraises at that number, that after repair value, then you can get that renovation.
And there are some that are streamlined.
Yeah, well, the Streamline Refinance is under the $40,000.
So let's say it's got a broken boiler,
Mhm.
and that's it. Everything else was fine, but they left the house and the boiler broke, and that's all they need. So you can include that
Right.
in your renovation.
Without having the HUD inspector come out and and inspect and make sure that budget is on point. You could just do the Streamline where there's no inspector, and we'll give you the money for that repair based off the contractor bid.
So you do need a contractor for the
203K loans, which is FHA, and the home style renovations, which is conventional product. You do need a licensed and insured contractor. For the hard money, like the loan that you took when you flipped your house, you don't need a licensed contract. You don't need any contract. You can do the work if you want. We don't check.
Right. Okay.
Yeah. So.
A lot of products. If you want any information on any of these products that we've discussed, call Nick. What's the number?
631-428-6928. It's my cell phone. Call or text me at any time.
And that's nights and weekends too. I'm Karen Roth from RE/MAX Integrity Leaders. See you soon. If you like this video, make sure you subscribe to this channel, give it a thumbs up, and click the bell to be notified of my next post. Stay tuned for my next video.